Imagine discovering that there is a CRA form available for free, designed specifically to let eligible couples split certain pension income between them, and realizing you never even knew it existed. Now, before you get too excited, there is an important correction to the headline. Being born before 1960 does not automatically qualify you for this form. There is no secret CRA rule that says every Canadian born before 1960 gets a special payment or automatic tax reduction. But if you are 65 or older, married or living common law, and receiving certain types of eligible pension income, there is a legitimate CRA election that could be worth checking. It is called Form T1032, Joint Election to Split Pension Income. And this matters because the CRA says eligible spouses or common law partners can allocate up to 50% of eligible pension income from one partner to the other. That does not mean everyone should split 50%. It does not mean everyone will save money. And it certainly does not mean CPP or OAS can simply be moved from one spouse to another. What it means is that some retired Canadian couples may have an opportunity sitting inside the tax system that they simply never investigate. And today we're going to make this much easier to understand. We'll look at exactly what Form T1032 is, who may qualify, what kinds of pension income can be involved, why age 65 matters, what happens when one spouse earns considerably more pension income than the other, and the mistakes you absolutely want to avoid. So if you enjoy straightforward information about Canadian retirement, CRA rules, CPP, OAS, GIS, and senior finances, subscribe to the channel and turn on notifications. Because the goal here isn't to promise you money. The goal is to help you understand the rules well enough to know when there may be something worth checking. And there is one particularly important detail about this form that many seniors misunderstand. We'll get to that shortly. Let's start with the simplest possible explanation. Form T1032 is called the Joint Election to Split Pension Income. The CRA provides the form for couples who want to elect to split eligible pension income between spouses or common law partners. The word that matters most here is not form, it is eligible. Because pension income splitting does not mean that every dollar of retirement income you receive can simply be transferred to your spouse for tax purposes. The CRA has specific rules about what qualifies, and this is exactly where many seniors can accidentally rule themselves out before they even investigate. For example, imagine a retired couple. The husband receives a substantial amount of eligible pension income. The wife has a much smaller amount of qualifying pension income. If the couple meets the CRA's conditions, they may be able to make a joint election that allocates part of the husband's eligible pension income to the wife for tax purposes. The CRA says the couple can allocate up to 50% of eligible pension income to the spouse or common law partner. Why could that matter? Because Canadian income tax is based on each individual's taxable income. If most of a couple's taxable pension income is concentrated in one person's hands, while the other spouse has significantly less taxable income, pension splitting may change the income distribution between them. And depending on the couple's complete tax situation, that can potentially reduce their combined income tax. But notice the language I'm using, potentially. This is not a guaranteed refund. It isn't a government bonus, it isn't free money from Service Canada, it is a tax election. And whether it helps depends on the couple's circumstances. That distinction is extremely important. The CRA itself explains that eligible couples can jointly elect to split qualifying pension income, and the election is made using Form T1032. So the first takeaway is simple. If you're a senior and you've never heard of T1032, it is worth understanding. But don't assume that your birth year alone determines eligibility. Your pension income and circumstances are what matter, and that brings us to one of the biggest misconceptions surrounding this topic. If you were born before 1960, you're now at least in your mid to late 60s. For the 2025 tax year, someone who is 65 or older by December 31st, 2025 falls into an important category for certain pension income rules. The CRA's pension income amount rules specifically identify eligible pension and annuity income for individuals aged 65 or older. But there is a major difference between saying you are 65 or older and saying you can split every type of retirement income you receive. Those statements are not the same. In fact, the CRA's rules show that eligibility can depend on the type of income involved. For example, certain RPP lifetime retirement benefits, certain annuity payments, and RRIF income can qualify for the pension income amount for people 65 or older. That is why I don't want you to hear the headline and immediately think, I'm born in 1958, therefore I can split everything. No, that's not how it works. Instead, think of your retirement income as a collection of different buckets. You might have CPP, you might have OAS, you might have a workplace pension, you might have a RRIF. You might have an annuity, you might have investment income, you might have withdrawals from registered accounts, and those different sources do not necessarily receive identical tax treatment. The CRA's retirement income tables show that different slips and different types of income are reported on different lines of the tax return, and eligibility for pension-related tax treatment can depend on the nature of the payment. This is one reason why simply looking at the total amount deposited into your bank account every month isn't enough. You need to know what that money actually is. And later, I'll explain a very practical way to do that without becoming a tax expert. But first, let's talk about who should pay particular attention. The first group is married couples and common law partners who are both Canadian residents under the CRA's relevant rules. The CRA states that pension income splitting generally requires the spouses or common law partners to be residents of Canada on December 31 of the tax year, subject to specific rules and exceptions. The second group is couples, where one partner has significantly more eligible pension income than the other. This is particularly worth investigating because pension splitting is fundamentally about reallocating qualifying pension income between the two partners for tax purposes. Think about a couple where one spouse worked for decades and receives a workplace pension, while the other spouse has a much smaller retirement income. Their household may have plenty of money to live on, but the taxable income might be distributed very unevenly. That is the kind of situation where pension splitting may deserve a closer look. Another group is seniors who receive RRIF income. The CRA identifies RRIF income as potentially eligible for the pension income amount for individuals who are 65 or older, subject to the applicable rules. This is important because many retirees assume their RRIF is simply their own money and therefore has nothing to do with pension splitting. The tax treatment can be more nuanced than that. And there is another group worth mentioning, couples who recently retired. Why? Because retirement can completely change the balance of income between spouses. During working years, one spouse may have earned much more. After retirement, however, that income can change dramatically. One spouse may have a workplace pension, the other may have RRIF withdrawals. One might still be working, the other might already be fully retired. That changing income picture is precisely why retirement tax planning shouldn't be based on assumptions from 10 years ago. But here's where I want to slow down. There is one category that people often bring up when discussing pension splitting, CPP and OAS. And this is where you need to be careful. If you receive CPP or OAS, you might reasonably think, that's my pension, surely I can split it. But don't make that assumption. Form T1032 is for eligible pension income, and the CRA's eligible income rules are specific. OAS, for example, is reported separately on the tax return. CPP benefits are also reported separately. And the fact that a payment is part of your retirement income does not automatically make it eligible for pension income splitting under T1032. This is a critical distinction. You don't want to watch a video like this, hear the phrase split your pension, and then attempt to move your OAS or CPP between spouses. Instead, look at the actual income slips and the CRA's rules for the specific type of income you received. For 2025 returns, for example, the CRA's retirement income summary shows which pension amounts are reported on which lines and identifies the conditions that apply to different income types. The CRA also has a specific page explaining OAS reporting and notes that OAS amounts are entered on the appropriate lines based on the T4A, OAS. So don't treat all retirement income as one giant category. That is one of the biggest mistakes a senior can make. And there's another mistake that may be even more common, assuming that if your tax software didn't automatically mention pension splitting, you must not qualify. That's not necessarily a safe assumption. This is perhaps the most important financial lesson in the entire video. Pension splitting is an election. The CRA says the transferring spouse and receiving spouse or common law partner must make a joint election using Form T1032. That means the couple has to decide whether the election makes sense, and the answer isn't automatically yes. Let's use a simple example. Suppose one spouse has qualifying pension income and the other spouse has very little taxable income. You might immediately think, let's split 50%, but the maximum isn't necessarily the best choice. The CRA says you can allocate up to 50% of eligible pension income. Up to is important. You may have a choice about the amount, and changing that amount can affect both spouses' tax returns. That's why a good tax preparer doesn't simply ask, can you split pension income? They should also ask, what happens to your combined tax position if you do? This is particularly important if either spouse has other deductions, credits, benefits, investment income, or special tax circumstances. The correct strategy for one couple may not be the correct strategy for another, and there is another reason to be careful. Some seniors focus only on income tax and forget that changing taxable income can sometimes affect income-tested programs. So if you're receiving benefits that depend on income, you should understand the wider consequences before making a tax election. This is not a reason to avoid pension splitting. It's a reason to check the complete picture. And this is where professional advice can be worthwhile. Not because the CRA form is mysterious. The form itself is available directly from the CRA. It's because your overall retirement situation may be more complicated than the form looks. Let's make this practical. The transferring spouse reports the full amount of the eligible pension income on their tax return. Then the elected split pension amount is deducted according to the CRA's rules. The receiving spouse reports the amount allocated to them. The CRA identifies these amounts on specific lines of the tax return. For the 2025 tax year, the receiving spouse reports the elected split pension amount on line 11,600, while the transferring spouse claims the corresponding deduction on line 21,000. This is why you shouldn't think of pension splitting as physically moving money from one bank account to another. The money doesn't necessarily change hands. Instead, you're changing how eligible pension income is allocated for tax purposes. That distinction is huge. The spouse who originally received the pension doesn't necessarily write a check to the other spouse. The election changes the tax reporting, and the CRA has a specific form because both partners are involved. The election has to contain matching information. The CRA says that for paper returns, the completed and signed T1032 is attached to both spouses' returns, and if the returns are filed electronically, the couple should keep the form in case the CRA requests it. There's also an important detail that many people miss. Only one joint election can be made for a tax year. If both spouses have eligible pension income, they have to decide who will be the transferring spouse and who will be the receiving spouse for the election. So again, this is not something to treat casually, but the form itself is not some secret document. The CRA publishes it openly. The current CRA page provides the fillable PDF and previous year's versions. In other words, you don't need to pay someone just to obtain Form T1032. The form itself is available directly from the CRA. Now let's talk about another misconception. Some seniors hear pension splitting and immediately think that's only for wealthy retirees. Not necessarily. The question isn't whether you're wealthy. The question is whether you and your spouse have eligible pension income and whether the election makes sense in your particular tax situation. A retired couple can have a very ordinary lifestyle and still have different levels of taxable retirement income. One spouse may have a workplace pension accumulated over decades. The other may have CPP, OAS, RRIF withdrawals, and relatively little other income. The household doesn't need to look rich for the tax treatment to be different between the two individuals. This is one reason it's worth reviewing your tax return rather than judging your eligibility based on appearances. Look at the actual numbers. Look at the actual income sources. Look at the actual slips, and look at the CRA rules. Another mistake is assuming that if you've never done pension splitting before, you can never do it. The CRA explains that under certain circumstances, it may allow a late or amended election or allow an election to be revoked when the applicable conditions are met. There is a time limit associated with those requests. That doesn't mean you should assume an old year can simply be reopened. It means that if you believe you made a mistake in a previous year, don't automatically assume the answer is too late. Ask the CRA or a qualified tax professional about the specific year and circumstances. There is a difference between knowing a rule exists and knowing whether you qualify for it. And that distinction can save you from making an expensive assumption. Now let's talk about timing. If you're thinking about pension splitting for a tax year, the election has to be made with the tax return for that year, according to the CRA's filing requirements. For the 2025 tax year, the CRA says Form T1032 must be completed, signed, and attached to the paper returns by the filing due date. If you're filing electronically, you keep the form in case the CRA asks for it. That means this isn't something you want to leave until months after filing and then suddenly remember. The best time to investigate is before you file. Gather your income slips, identify the eligible pension income, compare the two spouses' taxable income. Then determine whether splitting could make sense, and if you're using tax software, don't simply click through every screen without understanding what you're being asked. Pay attention when the software asks about pension income splitting. If you use a professional tax preparer, ask the question directly. Don't assume they will automatically explain every possible retirement tax strategy to you. A simple question such as, do we have eligible pension income that could be split using Form T1032? Can start the conversation. And if the answer is no, ask why. Not because you distrust the preparer, because you want to understand your own return. That is especially important as you move deeper into retirement, because your income sources can change every year. Let's clear up another possible misunderstanding. Form T1032 is not a benefit application. It does not create CPP. It does not increase OAS. It does not automatically increase GIS. And it doesn't mean the government will send you an extra payment simply because you completed it. It is a tax election. Its purpose is to allocate eligible pension income between spouses or common law partners for tax purposes. That is fundamentally different from applying for a government benefit. This distinction matters because senior financial content online often mixes taxes and benefits together. You'll see a headline saying, CRA Form gets seniors more money, but that's not always an accurate way to describe what is happening. A tax election can reduce tax. Reducing tax can leave you with more after-tax income. But that isn't the same thing as receiving a new government benefit. And if you're receiving income-tested programs, the broader consequences of changing your taxable income should be considered. So whenever you hear a claim that a CRA form gives seniors money, pause and ask, is this a refundable credit, a tax deduction, a non-refundable credit, a benefit application, a tax election, or simply a form used to report information? Those categories are very different. Now let's make this extremely practical. You don't need to become a Canadian tax expert tonight. Instead, take a few minutes and gather your retirement income information. Start with your T4A and other pension slips. Look at your RRIF income. Look at any workplace pension or annuity income. Then compare your income with your spouse or common law partner's income. You're looking for an imbalance. If one spouse has substantially more qualifying pension income and the other has substantially less taxable income, that's a reason to investigate pension income splitting. Next, ask whether the income you're looking at is actually eligible. This is where the CRA's official information matters. The CRA's pension income rules identify specific types of income that may qualify for the pension income amount and pension splitting, including certain RPP benefits, annuities, and RRIF income for people who meet the applicable age conditions. Then ask whether you're both eligible to make the election. The CRA's rules include residency and relationship requirements, and the couple must make a joint election. Then ask the most important question, would splitting actually improve our combined tax position? That's the question that takes you from, I heard about a form, to actual retirement planning. And if you aren't comfortable doing that calculation yourself, take the information to a qualified tax professional. The CRA also provides the form itself for free. You don't need to buy the form from anyone. You don't need to pay a social media account for a copy. You can obtain the official T1032 directly from the CRA. If this information is helping you understand your retirement taxes more clearly, this is a good point to subscribe to the channel. We focus on practical Canadian senior information without pretending every rule applies to everyone. And now let's talk about the mistakes that can turn a potentially useful strategy into a headache. Mistake number 1 is assuming your birth year guarantees eligibility. It doesn't. Being born before 1960 simply means you're in an age group where certain pension income rules may be relevant. You still need qualifying income and must meet the applicable conditions. Mistake number 2 is assuming every pension is eligible. Again, no. The CRA has specific rules for eligible pension income. Mistake number 3 is assuming 50% is automatically the right amount. The CRA says you can allocate up to 50% of eligible pension income. That doesn't mean you should always allocate 50%. The best percentage depends on your circumstances. Mistake number 4 is assuming pension splitting physically transfers your pension. It doesn't work that way. It's a tax election that changes how eligible pension income is allocated between the spouses for tax purposes. Mistake number 5 is forgetting that both spouses are involved. The election is joint. The CRA requires matching information and signatures for the applicable paper filing process. Mistake number 6 is ignoring other income-tested programs. If you receive benefits that depend on income, don't look at tax savings in isolation. Your overall retirement picture matters. Mistake number 7 is relying on a headline instead of the CRA's actual rules. This is probably the biggest mistake of all. If someone says born before 1960, you automatically qualify for thousands of dollars, that's a red flag. A trustworthy explanation should tell you the conditions. It should tell you what the form actually does, and it should distinguish a possible tax saving from a guaranteed payment. This is another important point. Pension income splitting is specifically designed around spouses and common law partners. So if you're single and there is no spouse or common law partner with whom you can make the election, Form T1032 isn't going to operate the same way. If you're widowed, your circumstances can be more complicated. The CRA has specific rules for certain situations involving the death of a spouse or common law partner, and tax treatment can depend on the year and the type of income involved. So don't assume that because your spouse died recently, every pension splitting rule disappears, or that every rule continues exactly as before. This is one of those situations where the details matter, and it is another reason why a headline such as born before 1960 is useful for attracting attention, but isn't enough to determine eligibility. Your marital status, your income, your pension source, the tax year, and the CRA rules all come together. There is another senior tax provision worth knowing about, although it is separate from Form T1032. The CRA says people who are 65 or older at the end of the tax year may be able to claim the federal age amount, subject to the applicable net income rules. This is a good example of why seniors should review their tax return carefully. There isn't necessarily one magical form that unlocks everything. Instead, retirement tax planning is often a collection of different rules. You may have pension income, you may have the age amount, you may have eligible medical expenses, you may have pension income splitting, you may have other credits or deductions depending on your situation. The CRA's dedicated page for adults 65 and older specifically encourages seniors to file their taxes because the CRA uses tax return information to determine eligibility for various benefits and credits. So don't let the title of this video give you tunnel vision. Form T1032 is worth understanding, but your complete tax return is what matters. During your working years, taxes can feel relatively straightforward. You have employment income, your employer issues a T4, taxes are withheld, you file your return. But retirement can create a completely different income structure. You may have several T4A slips, you may have a T4A OAS, you may have a T4AP for CPP, you may have RRIF withdrawals, you may have investment income, you may have a workplace pension, and you may have a spouse whose income looks completely different from yours. That is why retirement tax planning deserves more attention than many people give it. The question isn't simply how much money did we receive? The question is, what kind of income was it, who received it, how is it taxed, and are there elections or credits that apply? That's the mindset I want you to take away from this video. Not fear, not complicated tax jargon, just curiosity. If you're 65 or older and you're part of a couple, ask whether pension income splitting applies to you. If it doesn't, fine. You've checked. If it does, then you can investigate whether it makes sense. That's a much better approach than assuming you're either automatically entitled or automatically excluded. So here's what I want you to do. First, find your pension and retirement income slips. Second, separate the different sources of income. Don't lump CPP, OAS, RRIF income, workplace pensions, and investment income into one number. Third, look specifically for eligible pension income. Fourth, compare the taxable income of both spouses or common law partners. Fifth, ask whether pension income splitting could improve your combined tax situation. Sixth, review Form T1032 directly through the CRA rather than relying on a third-party website. The CRA provides the current form and previous versions on its official site. Seventh, if you're unsure, ask a qualified tax professional or contact the CRA. And eighth, keep a copy of whatever you file. That last point is simple but important. If you're filing electronically, the CRA says you should keep the completed election in case the CRA asks for it later. Don't throw away your records just because the return was submitted electronically. Keep them with your tax documents. Now let's return to the headline. Born before 1960, that sounds like the key. But after everything we've covered, you can see that your birth year is only the beginning. The real question is, are you 65 or older? Do you have eligible pension income? Do you have a spouse or common law partner? Do you meet the CRA's conditions? And would splitting that income actually help your household's tax position? That's the real question. Form T1032 is not a secret government check. It's not a special senior bonus. It's not something every Canadian should automatically file, but it is a legitimate CRA form that eligible couples can use to jointly elect to split qualifying pension income. And because the form is free and publicly available, there is no reason to pay someone simply to obtain the document. What may be worth paying for, depending on your situation, is professional advice about whether using the election makes sense for you. That's a very different thing. So let's make this easy to remember. If you were born before 1960, you are now in an age range where senior tax rules and pension income rules may be especially relevant. But age alone does not qualify you for Form T1032. The form is called Joint Election to Split Pension Income. It is used by eligible spouses or common law partners. The CRA says eligible couples can allocate up to 50% of qualifying pension income from one spouse to the other. Certain types of pension and annuity income can qualify, and the CRA specifically lists eligible income categories for people 65 and older. The election can affect the income reported by both spouses. The transferring spouse claims the elected split amount as a deduction, while the receiving spouse reports the amount as elected split pension income. And perhaps most importantly, don't assume that every retirement payment, including CPP or OAS, automatically qualifies. Check the actual source of the income, check the CRA rules, and check the effect on your complete tax situation. Because retirement planning isn't just about how much money comes into your bank account. It's about understanding how the different pieces fit together. And sometimes the most useful financial question isn't, how do I get more money? It's, am I using the rules that already apply to me? That's the question Form T1032 gives some Canadian couples a reason to ask. And if you are married or living common law, 65 or older, and receiving pension income, this is one question you can take to your tax preparer today. Do we have eligible pension income that could be split using Form T1032? And would doing so actually benefit us? That one question could lead to a useful tax conversation. Or you may discover that pension splitting doesn't make sense for you. Either result is valuable, because the goal isn't to file every form you hear about. The goal is to understand which rules actually apply to your household. And that's especially important in retirement, when your income may come from several different sources and small tax decisions can matter over time. So before you file your next return, don't just look at the bottom line refund. Look at the structure of your income. Look at your pension slips. Look at your spouse's income. And if you're eligible, investigate Form T1032. The official CRA form is available directly from the Canada Revenue Agency. One final reminder, this video is educational information, not personalized tax advice. Tax rules can depend on your individual circumstances, province or territory, income sources, and the tax year involved. For a decision involving your own return, verify the current CRA rules or speak with a qualified tax professional. If this video helped you understand a CRA rule that you had never heard of before, subscribe to the channel. And if you know another Canadian senior who is retired, married, or living common law and might benefit from understanding pension income splitting, share this video with them. Because sometimes the most valuable information isn't a new government program. It's simply knowing that a rule already exists. Stay informed, check the official CRA information, and most importantly, don't rule yourself out before you know the rules.